Guten Morgen, wir fangen pünktlich an.
Good morning. We'll get started right on time. So good morning, ladies and gentlemen, and welcome to the annual results media conference of Allianz. As usual, Mr. Bäte, our CEO, and Mr. Terzariol, our CFO, will present to you the results of fiscal year 2019. Afterwards, there will be the opportunity for your questions to be asked, and the only change this year is that we also have a phone conference, and the journalists who are linked into this via phone will also be able to ask their questions later on. And with this, I would like to hand over to Mr. Bäte. Well, good morning to everyone here in the room. Welcome. Thanks for having come here to Munich. We have good weather today, and that fits the figures we would like to present to you. The headline taken by our communication team is delivering, and that is a good headline for the whole topic. I'll be comparatively brief because I have a real good CFO who will give you all the details later on, which makes my work a little easier. And with this, let me get started with the content. We have three parts. First of all, I would like to give an overview of what happened over the course of the year 2019, simply the most important figures. Then I will talk a bit about our strategy and where we stand with this. And then, of course, what we want to reach during the year 2020. Okay, let me start with this last year, and this is on page A3 for everyone following us online. Page A3. The 142 billion revenues threshold we crossed for the first time. Revenue growth of 8%, which you have to imagine was double the economic global growth. So one of the biggest growth figures in the past year. Our operating profit grew by 3% to 11.9 billion, the third record year in a row, if I'm not mistaken. Shareholders' net income grew by 6% to 7.9 billion, so we're around 50 million below our record year 2007, and earnings per share grew by 8%, close to 19 euros now. Our dividend, this is the proposal for the annual general meeting, so this has to be, of course, approved by the AGM, but we wanted to increase by 7% to 9.60 euros, and we will explain this in a minute. That, of course, is linked to the share buyback, which we had announced yesterday evening. Then our Solvency II ratio, that of course is also important. Last year, due to the interest rate shock in August, we had to fine-tune here a bit, as we always do, and that's why our solvency ratio has returned to a very strong ratio, very strong level at 212%, and our return on equity is also on a historic high, 13.6%, as the stock markets did real well, at least globally speaking, not when it comes to DAX, but we were positively affected by this, and we had a total shareholder return of a good 30%. So if you look at the core figures, first of all, we can say that we are quite satisfied with them, which of course is due to the fact, or if you say, well, at the beginning of the year, Allianz tends to be a little overcautious, but there's a certain decoupling between the capital markets, the stock exchanges, and the political environment. And I would like to talk about this a bit. On the one hand side, we have declining economic growth based on different issues, political and trade issues. And in addition to this, we now have the coronavirus in China. And you can't talk about multilateralism these days, and the longer Brexit is still a factor of uncertainty. So all of that has a negative touch, and we still have regulatory changes and developments which are not always that positive. So there's a high degree of uncertainty in general. In many cases, we have to prepare and adapt for volatile results, and that's well, we first, for example, looked at the Solvency II ratio this year. Then there's, of course, climate debate, where hopefully Allianz will play a good role. And then we continue transforming our business models. So the fact that technology is no longer a necessary evil you have to deal with, but that over time, and it takes some time, that technology will turn into a competitive edge for a company. So nothing's changed of these framework conditions. Nothing's changed in the fact that we try to master them as well as possible, which works well in most of the cases, but for a company with revenues such as ours of close to 150 billion, of course there's always one or the other factor that doesn't run that well. Now I would like to continue with the customers. 5 years ago, that's my fifth annual media conference. This year we started with 5 years ago with the question how we can put customers into the focus of our actions. We said most of the companies try to do that, but it takes some time to anchor all of that. And that's why we're delighted about some facts. First of all, we've increased the number of direct customers worldwide last year to over 100 million, 101 million. And we have an additional 200 million customers indirectly and through Allianz global partners in the B2B2C business. But 101 million direct customers worldwide. And then the second point, how the development of our NPS, we saw a slight decline in the figures that were published. So there was in Turkey we had to increase prices quite a bit through changes, and in Eastern Europe we had to tackle profitability issues, and that drove down our NPS. But the figure that I look at is most of all is we are loyalty leaders, so the market leaders in the Net Promoter Score in different countries. And here you can see that we've increased the share of loyalty leader segments to 46%, and we want to come up to 50%. So then half our business, we will be leaders in customer satisfaction. Of course, there's some volatility over the years. If you do innovation, ladies and gentlemen, it doesn't always go upward all the time. There will be ups and downs when AI systems don't work, or so that happens even to Amazon. And this is, but nevertheless, it's something you have to look at. And it's good to see that we've grown when it comes to loyalty leaders. And there are many examples also when it comes to customer feedback, and we trace this not just on the country level, but also on the level of the board of management. I'll deal with this myself. So life is not a straight line, but nevertheless, it's great to see that year on year, we've seen improvements in this regard. The second topic that was mentioned time and again, and that's been written a lot about, is what about the engagement of our employees? And in last year's engagement survey, you could see that we've reached a target value of 73% we set ourselves for 2019. Now, why 73%? Well, that's from the survey that we take on the global level together with other companies. We picked out 14 ones that deal or reflect the topic of leadership quality. And we then develop an index from these questions, and we've come to a level where we don't have to hide behind the best companies. And that holds true, for example, also for digital learning. We started with LinkedIn Learning some years ago, and now we've become the global benchmark in this regard. So we use the issue of digital learning consistently within Allianz. That's great to see. You can always do more, but nevertheless, it's great to see. And the second topic, I've been asked quite often, what do you do for your employees? Well, 3 years ago, we said when we want to reach our productivity goals, we want to have our employees participate through free shares from this. And this year we will deliver on that. Each and every employee will have access to these shares, and where we cannot hand over shares, we will do this with a cash payment. And I'm glad that our colleagues have worked so well that we've reached the profitability goals for 2021 already in 2019, especially through the improvements in P&C. Now, when it comes to diversity, and in this regard measured by the question how many female managers we have, we've seen a continuous upward trend as well in this regard. So not just in the financial KPIs, but also when it comes to customers and employees, we've tried to improve consistently, and will continue to do so. And I've always been glad about the fact that, in companies which are extremely large and complex, such as our OEs in France and Germany, here the satisfaction levels were never as high, and we always said, well, it's difficult to reach that due to the complexity, due to the old legacy IT systems we have there. We will never get good values there. But especially in the last year, there were dramatic improvements in Germany and France. In the inclusive meritocracy index in Germany went up by 12%, and I'm especially glad about this. So congratulations to Mr. Tyson, Mr. Röhler, and the German colleagues and Czech Richer and Sergio Balbinot also proved that in France that you can transform a company and keep everyone on board during this process. Then there's a topic that we've been focusing on for years. In 2010 already, we set ourselves demanding climate targets for 2020 for Allianz as a company and for our employees. And we will report, of course, on these goals in the annual general meeting. But what was also important to us over the past years is that we are not just a good citizen, but especially a corporate citizen, but especially in our role as a major investor. We also focus on these issues. So early on, we were part of the initiatives in regards to responsible investment. We joined the Finance Initiative early on and supported NGOs. And then last year, we took it one step further and went together with many other companies, with some colleagues who have a specific profile. We as an insurance company or those heading pension funds or sovereign wealth funds are the ultimate deciders, if you wish, on how money will be invested. That's different to asset managers, because asset managers offer products we can pick as customers, but those who decide about the investment in detail have a responsibility when it comes to the question whether climate change will happen. And we've set up a group. Initially, there were 12 members, and all of this was accompanied by the United Nations. And we said by 2050, we want to reach the UN goals of being zero in our net emissions by making sure that in our portfolios, in our asset portfolios, equity portfolios, real estate portfolios, we make sure that we get this net zero. And we started in September with the meeting in the UN General Assembly, supported by many heads of state and government, with $2.5 billion. At the end of the Davos week, we were at $4.8 trillion. And these figures have developed well. All our colleagues are on board, AXA Generali, Swiss Re, and we're really delighted about the fact that we've been able to really develop something together which has started a real dynamic development now. And you can also see this reflected in the ratings we've received and in the way of how our portfolio has changed. We've been carbon neutral since 2012, for example, and in many of the industry ratings, be it because which is the background for the Dow Jones Sustainability Index, be it MSCI or FTSE4Good, Allianz has top positions in all these ratings, and I'm really delighted about this, and our employees are also proud of that, and even my kids think that this is cool, and we want to further develop this topic, and we don't do this, and that's important to say, we don't do this driven by the fact that it's on vogue now, but because we've had a long development agenda, so we don't stick to any Allianz-specific rules, but we stick to the rules of the UN. So this topic of the Science-Based Target Initiative is what we develop because many hundreds heads of state and government have signed that, and we stick to the rules of the UN because we don't know any better than those experts, of course. Okay, then looking into the question how we will continue with our strategy and what we've done so far. So without giving you 25 detailed figures that you should then all remember, let me just say that over the next few years, we plan on systematically seizing the synergies that we have and use them. And we always write about one global business model and one global insurance platform, which means basically that we've understood that, for example, motor insurances are quite similar across countries. If you look at the terms and conditions, at the business processes, at the fact how you present a proposal and how you sell a policy, how you report a damage and how you then manage claims. Of course, there are differences in when it comes to the regulatory details, but the core is identical to up to 80% of that. So we started the process with motor insurance, and we've grown far there, and will now continue in the private business, in the retail business, with the other non-motor areas to develop similar products we can roll out cross borders. So in Germany, we just had the soft launch for our non-car products, and that's been going great. And the next country we will do this will be Italy. And now we just have to make sure that we scale all of this up a bit quicker than we usually do, because there's no reason not to do it. So I was asked by one of the other colleagues over the past weeks, what's the obstacle to a very quick scale up? And this is what you can see on the right hand side. This is the high degree of complexity in the existing systems. And I mean, if you build something up that you have here, you've built up a system that you have. We don't want to tear this down, you know, but the topic of decommissioning old systems, of legacy systems and products, is highly important to us. We have a very ambitious plan to decommission our legacy systems, and you can do this if you realize at home that you've bought too many sneakers, you know, before you buy a new pair, you will have to bring one pair to the recycling bin, you know. And this is what we haven't done so far. We've put up products on top of each other without decommissioning the old ones. And this is what we now have to work on. And it's difficult if they're linked to each other, and that leads to issues time and again, because then you realize that one or the other IT plug hasn't been used correctly. But there's no way around it. We have to systematically decommission the legacy systems, and we have to pick up a lot of speed in this regard. And the second point then is we have to further develop our infrastructure, because for many years we consolidated data centers. We virtualized 90,000 workplaces. We have a virtual network. All of that is great, but it needs to develop further. We need to get from data centers to the cloud, which is not trivial. I mean, all of this always sounds easy, but in operative work, it's sometimes a little difficult and tricky. And I mean, we're not doing this just to reduce costs, but at the end of the day, we want to have processes and products which are much easier to understand for both our customers and our employees, and easier to explain, where people say, okay, I've understood this intuitively without 2 hours of explanation. And that's the idea that we're focused on each and every day. And this is also what we do when it comes to technology. There were also 2 or 3 questions in this regard, and I would like to explain what we want to do here. We have our software, the Allianz Business System, which we've developed over the past at least 15 years and fine-tuned, and we've now developed it in a way that Microsoft has decided to set up an industry vertical together with us. That is to say, we offer our own software to the market because we believe that this is a very good product, and there are 3 main differences. So first of all, there is the open source core, which is accessible to everyone, and which we will further develop. And there we will also implement a new service architecture over time. Then there's the so-called Enterprise Edition, which we make available to our customers. And beyond this, together with partners, we've developed a marketplace where you can buy additional services. And we believe that also in the industry insurance, over time, elements of the business model can be separated from each other. In our industry, others than others, we still have quite a monolithic approach. Each and everyone has their own development, products, services, and distribution, and only small parts are being outsourced. Our industry vision is different from that, and we want to make our good technology available also to others. And of course, we also want to earn money with that. Okay, now a little bit about the topic of where will we get economic benefit in the future. I mean, one or the other cynic will say, yeah, we've heard all of this, globalization worldwide, we've heard this over 20 years, but where's the economic benefit? And on page A11, I would like to explain this to you a bit from a conceptual point of view. We know that in a digital world, or in a world that is being more and more digitalized, only customer satisfaction will protect you. In the industry, one or the other still has the idea of being intransparent and hiding margins, that this will be the path to success. But we believe the only way is transparency and high customer satisfaction. And this is something we have to learn ourselves. It's not something that is innate to us or so. In the year 2020, for example, we will introduce a new real-time customer satisfaction system. Voice of Customers is its name, where we want to measure after claims handling or in the call center how satisfied our customers are. So we need the right infrastructure for this, the digital data for customers to do this. So we don't just want to measure customer satisfaction by calling them and hoping that we can talk to them, but we want to do this in real time across several data points. And through this, we can then learn how we can improve. And the parts in our business system where customers say this only costs us time and money should then be improved when it comes to automation and performance. And we want to invest this kind of money into better services, but also into better advice. And let me repeat this. I mean, you hear time and again that the digital world of Allianz will not need human beings any longer. Everyone will be talking to chatbots. No, that's complete nonsense. But there's also difference from country to country. 40 to 60% of customer calls we get these days are to explain something and to troubleshoot somehow. So if we could reduce this number and then invest into better advice for customers, then we would take a huge stride ahead. So Allianz each and every year, including asset management, invests more than 3.6 billion euros into our IT systems. And we want to furthermore invest more and more into a better customer experience. And at the end of the day, this is also good to our shareholders, because we realize the moment we reduce complexity, everything gets faster and less expensive. So part of the profitability gains then can also be invested into higher margins. And the other advantage that stems from this, what we've seen in Germany, where over the years we had lost quite a bit of market share in P&C, and if you take this step by step back on track, and we're far from being finished in this regard, but if you do this, you regain market share. So if you get better products for the customers, if you reduce, if you have a fair price for risk and reduce any cross-subsidizing, then distribution and sales will improve, and customers who we lost will return. And that's an important piece of news. A lot of growth we've had in France and Germany is from customers who used to be Allianz customers in the past and have returned to us now. And that's something that really makes me happy. Then on page 812, another topic. We're being asked time and again, when will there be the next mega deal? And then we always say, the next mega deal won't be coming right now. Then you might ask, what about day after tomorrow? And then we say, no, not day after tomorrow. So why do I mention this? We have continuous investments into external growth. In the year 2019, for example, we made major strides ahead from our point of view in 3 countries above all. Let me start with the United Kingdom here. In individual, we were always well set up in individual segments, but we were much too small in the retail business and in motor insurance and in home insurance. And after many years of preparation, then we've now fully taken over LV, which is the insurance company in the UK with the highest customer satisfaction by far, which is important to us because we can learn a lot from this as a group. They are also amongst the most successful direct insurers in Europe, where we can also learn quite a bit. And then we also bought the home portfolio of Legal & General, which in some and the capital market has told us that we paid fair prices in this regard, which brought us from the number 6 position in the market onto the number 2 position. And if you include Euler and AGCS, we've become the largest P&C company in the United Kingdom, by the way. And that's important because the United Kingdom is the 2nd largest non-life market in Europe. So even after Brexit, the importance of the UK for P&C is still very large for us, and we're not present in the life business on purpose there. Then the second topic, China. This is a long journey, of course. It will take years for us to earn as much money in China as in other important areas, but nevertheless, we were the first non-Chinese insurer who received a license for forming a wholly owned foreign financial holding company. And what does this mean? Well, in addition to being a political success, it means that we can now run some segments alone that we didn't have the opportunity so far. So we can offer life insurance in the near future and hopefully also credit insurance and the investment management or the insurance asset management is also an element that we can build up there. So we get much more leeway and a higher degree of freedom than we used to have in the past. And I was delighted about the support that we've received from the government, which has increased quite a bit. It used to be a little superficial in the past, but that's really improved quite well. And then we've launched our cooperation with JD.com, and they doubled their market capitalization in 2019 because they set up a new business model, and we've also invested into the sixth largest insurance company in an asset management manager with close to 200 billion assets under management, the leading pension insurer in China, Taikang. And that's important because in different, compared to other partnerships, this is a privately owned and controlled company, and that for us is strategically important to have private partners, Taikang just as well as JD. And then finally, after many years of hard work in South America, where we experienced some surprises time and again, also in 2019, when we look at Argentina and the devaluation of their currency. But nevertheless, our business in South America has developed into the right direction when it comes to profitability and growth. And through the acquisition of the P&C portfolio of SulAmérica, the oldest insurance company there, privately led in Brazil, we will become the number 3 in Brazil in P&C insurance and the number 2 in motor insurance. And Brazil by far is the most important economy in Latin America, with more than 200 million inhabitants and people there, and that was a huge success there for us. Like all of the other activities mentioned here, that was prepared over years, and the group has worked on that for years together with partners, and that's then good for both sides, for the group as well as for the seller. Now the ambitions for 2013 on page A13, and here you can see quite well how we've developed over the past years, 2016, 17, 18, 19, and we want to continue this path in 2020. The midpoint in the operating result will be raised to 12 billion, and as always, we have a bandwidth of 500 million plus or minus. And of course, it can happen that we don't reach this a goal should there be very strong natural catastrophes or a collapse on the financial markets. Then it might be that we don't reach the results, but so far we've been quite successful in this and also lucky, and we've delivered 5 times in a row on this. And the question now is, what does this mean for the goals that we set ourselves and presented last year for the year 2021? Well, let me start at the bottom here when it comes to customer centricity and employee commitment. We've reached a goal in the IMIX, and we need to keep this now, which is not that easy, because we'll continue our transformations. Our employees need to be kept on board for all of this after the major steps ahead we've taken, the large OEs last year. Then when it comes to NPS, the NPS over the market, we need to come to 75% plus, and after the decrease last year, we have great plans to move ahead, and I'd be glad if we were able to reach this, especially in Central Europe. If we focused on this in especially in P&C there, then the topic of solvency, the solvency ratio, we're still on quite a comfortable level, and that is also why we've continued the share buyback topic, which shows that Allianz is consistent in its approach. Now, when it comes to profitability, we also have a strong focus on this. The return on equity is one of the most important key figures driving our stock price, and that's why that was That's why it was important to deliver on the 13.6%. And in spite of the share buyback, we'll also be well on track here. And then the earnings per share, we wanted to reach 5% plus when it comes to growth, and 4% of that organic. And we'll also manage this. It won't be easy. That's obvious, because in P&C, for example, in the commercial business, in the corporate insurance, it's difficult right now. But nevertheless, I'm quite optimistic, because prices have started to surge, and we don't see this just in the price negotiations, but also in the premiums already booked. But the insurance experts amongst you will know that it takes some months or quarters until price increases will have an effect operatively in the premiums, and we're working hard in overcoming the weaknesses, and that we also have at Allianz. And that brings me to the end of my presentation. Thank you very much.
Thank you very much and good morning. I'm going to give you a short update on the fourth quarter, and then I will report on the overall year in more detail. So on page 3, you see the key figures for the fourth quarter in total. The fourth quarter was very solid, and the earnings was increased by more than 5%, and the operating income was stable, and the operating profit and surplus increased by almost more than 10%, almost 10%, and the combined ratio sees 99.6. Adjusted by AGCS, the combined ratio would be 94.3. Now, in total, we have seen a very solid performance in our P&C business. If we take away AGCS for a moment and the other segments, we see a very good development of the operating result. In life and health, went up by 36%. And also another good point is the level of the new business margin with 2.9. So when you look at the percentages and thinking of negative interest rates, I mean, this is definitely a very good performance in asset management. We were able to increase our profits, and plus there is a quarter that we've with positive net flows, and not only at PIMCO, but also at AGI. We've seen net inflows. So that's a very good quarter in total. And as Mr. Bäte already mentioned, we made our homework in industrial insurance, but that's not only homework for us, but it's also work for that means the work for the entire industry. On page 5, we can talk about the year, and in general, the year was very good. Assumptions have gone up by 6%, and driven by life insurance and also by P&C. The operating profit went by almost 350 million, and then clearly we do see the deterioration in P&C because of the development of AGCS, but this was more than compensated by the good development that we've seen in the other segments. In particular, in life and health, profit is much higher than in the previous year. In asset management, we also seen a good increase of the profits. And also in our corporate segment, Allianz Technology has also very nicely contributed to this development. This reconfirms the sustainability and strength of our diversification in our business model. And we can also see in the development of the annual surplus. This is also represented there. So the annual surplus went up by 6%, and that also has influenced the ROI, the return on equity, by 40 basic points, and 14 basic points, which is then 30.6, which is a good figure for the ROE, and the earnings per share went up by more than 8%. So these are very good figures for the year 2019. So the capital position of Allianz is very strong. You can see the development on page 7. The shareholders' equity based on IFRS, which increased considerably, which is also related to the development of the equity markets. What is more important is the solvency ratio. So when we look at the solvency ratio and compared end of 2019 with the end of 2018, we dropped by 17%. But as you can see, we've seen an improvement versus the level of end of September. And this improvement is related to a slight relaxation in the interest situation. Interest in the fourth quarter went up slightly, and they have not dropped further, which we would otherwise have seen in the first 9 months of the year. But also on the whole, with 212 solvency ratio, we have a good capitalization. Last night, we announced a buyback. So if we take out this buyback pro forma from these calculations, then the solvency ratio would be 209. So again, a very stable solvency ratio, which reconfirms our capital flexibility in Allianz. On page 9, this is the normal development where we compare the development to the beginning of the year. I'd not go into further detail. I just want to stress the reduction versus the previous years driven by the development in the interest rates. And so this is also reflected in the market impacts. Now let's have a look at the segments. First of all, when we go to page 11, we can see that dynamics in our premiums and P&C was really good. And on the whole, the earnings were increased by almost 5%. And this growth is based upon price, which is 60% of the growth, comes from price increases and price changes, and 40% comes from volume. So all OEs have seen a positive growth rate, with one exception, which is Spain, where we carried out a portfolio restructuring. And what is also important to mention is other rate increases that we had with our renewals. And on average, across the portfolio, they are at 3.1%. And that's a good development, but it's also necessary because the claims inflation, of course, has to be balanced out by that. But so if you look at the price increases and the claims inflation that we see, the situation should be stable. Or in the case of HSS, we're going to see a positive trend. So the price increases should be much stronger than the inflation that we expect. So that renders a generally good picture regarding the assumptions. And then on page 13, we see a deterioration of 700 million. And as you can see in the operating profit, this deterioration comes from the underwriting result. And basically, that comes from AGCS. So that means if you look at the combined ratio of 95.5 for the year, and if we adjust it by AGCS, the combined ratio would be very good with 93.5. So we're talking about a combined ratio of 93.5. And then in AGCS, we're going to see that in a second. We have a combined ratio of 112. What does that mean for the future? That's actually positive, because clearly we not have these combined ratios always in HSS, but we also expect for the future an improvement of this level. And so we always believe that by 21, our combined ratio of 93% can be reached. Also, the expense ratio is 27.5, which is very good, and that's definitely a priority for us, as you know. That went up by 50 basic points. And in 2017, the expense ratio was at 28.7. That means in 2 years, the expense ratio was reduced by 1.2%, which is a very good result. On page 15, you see the operating profit and also the combined ratio for selected OEs. Very good is the development in Germany. We have a combined ratio of 92.4, which is definitely a very nice piece of information. And Germany makes 20% of our net contributions, and so that's a very good performance in our home market. Clearly, that helps us a lot. Italy, we continue to have a very good combined ratio. In France, the combined ratio is slightly is higher than we would actually have, but there were also major losses and also nat cats, and we have to work on the basic combined ratio. And then you see good figures in Eastern Europe, and we have went over the threshold of 90%. Australia is remaining really strong. Spain, we talked about Spain already, so the 98, that is simply an accident. And next year, we would expect that the combined ratio now goes to 95% or even better. HECS 112.3, as I said already, and so we have a reserve strengthening of 600 million. Adjusted by this reserve strengthening, the combined ratio of HES would be slightly above 100%. Then I would like to talk about Euler Hermes 80% combined ratio. That's very good. In particular, the risk management at Euler Hermes is definitely a best-in-class, best practice. We are so delighted and seeing that we can have these nice figures at Euler Hermes. So generally, this is a good picture with a few exceptions, but again, the combined ratio of 93.5. Without HESS and HESS, the future is going to develop better than what we saw in 2019. So we have the operating investment result that is 200 million down, but there was also a special effect in 2018. So actually, if you look at the current yield, and they are relatively stable. So on the whole, we see a certain stability in our current yields, although the interests are going down. We can, to a certain degree, balance off this pressure. Having said that, I would like to move over to Life and Health on page 19. Generally, this is a very good development we see here. First of all, our target of and the new business margin of more than 3% was reached. So in 2019, we have 3.2%. And that we've achieved, although the interest was negative. Let me reconfirm that. Although we had negative interest, we still were able to achieve our targets for 2019. The business mix is as we wanted it, and as you can see, our production has been increased. This particularly comes from Allianz Life, but also in the US, we've seen a very good development, and there are also other small OEs and countries that contributed to this good picture. The development of the operating profit in Life and Health is definitely very good, and generally the operating profit was increased by more than 500 million. And we've seen a very good underlying performance, which you can also see reflected in the development of the so-called loadings on the fees. They went up by 8%. So definitely our underlying performance is being supported by that. Plus, we've also seen some special effects, and we reported on a special effect in third quarter. That was the change of the amortization of capitalized costs at Allianz Life, acquisition costs, and that provided for that in Allianz Life. And also the capital result in the fourth quarter was very strong. So we've seen a very good development of the underlying performance, plus a very strong capital investment result, and also the special effect from the US made a contribution to this very, very good result in Life and Health. We can also see this in the list by segments. And units, the USA in page 23 have developed really dynamically with a growth rate in the operating profit of 35%. Asia Pacific looks also very good. We also have a growth rate of 34%. And that was Asia Pacific 3 or 4 years ago was quite small. And probably we were lucky we made 100 million profit, and now we have 400 million. And also in Italy, we've seen a good development because it is also related to the market condition, because we have a lot of unit-linked insurances in Italy. Because if markets development is very good in terms of the asset basis, then we're also making a profit. So many units have seen a positive development in life and health, in operating profit. Page 25, the capital investment margin raised by 6%, driven by volume. So the asset basis went up by 6%, and the capital investment margin in percentage remained stable. So that means that leads to an increase of the investment margin. And so in total, this is a good picture that our investment result is seeing here. Having said that, I would like to move to asset under management on page 27. On the whole, we have 2.3 trillion assets under management. That is a very, very large figure. Out of that, 1.7 trillion are assets that we keep under management for third parties. So we are the biggest active manager in the world. So clearly enough, we have a very strong insurance, and probably we're the first insurance in the world. But also we are also the first asset management in the world, and with 2.3 trillion total assets under management. And now we've done this in this presentation here. We've included a list of our asset classes and based on regions. As you can see, we are focused on fixed income, and as regards the regions, we're particularly strong in America, and we're strongly represented in America, but definitely we have a large presence in Europe. And on the whole, we have a very good regional diversification. Looking at the development of assets under management was very good in 2019, which you can see on page 29. On the whole, there are 76 billion net inflows. They mainly come from PIMCO. In the case of AGI, we had outflows, but 18 million inflows. Not every asset manager is able to do that. That was rather stable. And also, that's also important because AGI had 2 billion as well. So at least we see the tendency of the previous quarters has been maintained in the fourth quarter. And not everyone is able to make 80 million net inflows. And also the other factors also helped us to support our development. So the market development was rather positive, and also the fixed exchange rates led to an increase of the third-party net management of 17%. It's very good. And when we look into 2020, looking forward, because I've got the asset base, if it's higher, that also contributes to higher profits instead of so if you look at the forecast for 2020. So the development of revenue growth was also positive. On the whole, we grew by 6%. And as you can see, the margin dropped a bit compared with the level of 2018. But part of this reduction is related to investments. And so in the future, this will help our development of our revenue growth and the development of our operating profit. One part of the reduction of margin is due to the business mix, so most likely in the future we continue to be there. But looking at the overall picture, this is very good, and and which we can also see on page 33. In total, the operating profit went up by 200 million, and we made a calculation as well where we show the development of the operating profit if we take out the performance fees, so to take out the volatility. And as you can see, in the course of 2019, the underlying performance was very good, and that went up by 6%. The main driver for this nice development in asset management was PIMCO, with an increase of plus 10%. In AGI, you see a reduction of, but also we had this investment that pressed down the profits, and in the fourth quarter, adjusted by this investment. Actually, the operating profit would have in AGI would have been a few percentage points higher as in the previous year. Having said that, let's move to corporate on page 35. We became better more than 200 million. So we were able to reduce the loss, which is definitely due to the development in Allianz Technology. And the improvement in Allianz Technology was 116 million, and that was a bit better what we actually planned. And so we're very happy with the development of our Allianz Technology and in the course of 2019. And we're also confident that we will see a certain stability in 2020 and forward looking into 21 as well. Page 37, we keep showing the development of the non-operating items. The non-operating items became better by 300 million than compared with the previous year. So you can see there are more realized gains and losses. We've had more than in 2018. And basically, they come from sale of real estate. Moreover, we were kind of careful with regard to realized gains in shares. In impairments, we do see a certain stability, but as also Mr. Bäte said before, impairments in Argentina amounting to 100 million, and also in the fourth quarter, another 100 million impairments on life. So although the development was rather stable, we've also had a few major impairments that we had to be integrated into the figures and that we booked into the figures. And another improvement versus the previous year comes from when we don't have no one-off effects, and where the Taiwanese portfolio was bought, and that led to a loss. So in the non-operating items, we've seen a good development, and then also the tax rate is 25%. That lies within our expectations with the effective tax rate. So the forecast and the outlook for 2020. On the whole, we are aiming at a operating profit of 12 billion. That is our target. And so if we look at segments in P&C, we would expect 5.6 billion, much better than the 5 billion that we've made in 2019, which is mainly due to the better performance at AGCS forward-looking. But of course, also we want to move better, forward and develop in the other units as well. In life and health, we are targeting 4.4 billion, and as I said, we had a few special effects in 2019, so that's why this is a normalization, and most likely we're going to become a bit better. But with 4.4, we believe this is a good starting point for normalization. And in asset management, 2.7. We kept our forecast stable versus the level of 2019. And if actually the markets would develop, we would be better than 2.7. But we are always careful because of the exchange rate effects, because the operating profits in asset management are largely depending on exchange rates, and you never know what's going to happen with the financial markets. You can't say. So the outlook is at 2.7 billion for the year 2020. Summarizing, looking back to 2019, my favorite page is the page of Mr. Bäte, page number 3, 8% growth in the revenues, 3% growth in operating profit, 6% growth in the annual surplus, and 8% growth in earnings per share, 7% growth in the dividend. So that's a very good solvency ratio that allows us to make a buyback and also return on equity of 13.6. So these are very, very good figures, truly. And we could have never reached these figures without having the great performance of our employees. Like always, I would like to express my gratitude to our employees for the great work they rendered for 2019 and the cooperation for 2020. Thank you very much.
Damit eröffne ich.
Thank you very much, Giulio. And with this, I would like to open the questions session. Mr. Fleming, you go first. Michael Fleming of Börsenzeitung. 3 questions. First of all, regarding structures and synergies, then productivity, and on the forecast. Regarding structure and synergies, Mr. Bäte, you said Allianz wants to systematically see synergies over the next few years. You talked about IT and master product. And is there also an idea to change the structure of the company in any way, setting up new OEs or restructuring the OEs in some way? Then the question about productivity. You said the productivity targets for 2021 had already been reached, or were already reached in 2019. So do you have new targets that you're aiming at? And what would they be? And then the third question, forecast, P&C, Mr. Terzariol, you said the major effect was from AGCS, but other OEs would also need to improve. So which OEs would that be? And could you, in P&C, and could you tell us about the overall provisions for 2019 in addition to the 0.6 million for AGCS? Okay, thank you very much for the questions. We do restructurings all of the time in our structure, but oftentimes that's not being realized that much because we have a strong focus in Germany usually. But first, for example, Austria was integrated into Central and Eastern Europe in the past years and turned into our hub for CEE, and we plan to double the profitability there. And in Asia, for example, we flattened hierarchies. We had restructurings in Africa, adding some countries, in a way with others. So that will continue to happen. The only constant in change is change, and then we will keep changing structures. And the question is, and why do we do this? Well, because we want to use synergies and across countries, especially when it comes to product design and processes. We want to seize these synergies, and for this we need to become flatter in our hierarchies, and you will see this more and more in Allianz over the coming year. We reduce the hierarchy levels. Agile working has been started within Allianz. We have to be cautious in this process, but over the years you will see a flattening in hierarchies, which then enables us to roll out products more and more over several countries. Let me give you an example. 8-9 years ago, we started to successfully take life insurance products from the US to Germany for the new world of Solvency II and for the new world of much lower interest rates. Mr. Terzariol at the time was still in the US, and he helped us in bringing products to Germany, which have been highly successful in the meantime, where we've built up market share quite a bit. And now we do the same thing from Germany. Our life insurance in Stuttgart is highly successful in innovation, and especially when it comes to processes. And now we more and more use Allianz Germany's IT in life for product development to gain additional systems, and we want to use the machinery we have there, IVTs as they're called, for improvements across the country. So that leads to the fact that more and more we become a more international company, and that's only possible if we reduce leadership hierarchies. And that will continue to be the way. There's nothing special in this. Then the second topic, productivity. Mr. Terzariol will talk about the figures in detail, but this will not always be a straight line, you know. We have different levers that we've talked about, like improvement in the productivity, in our IT productivity, and that's already been reflected in Allianz Technologies figures, which, by the way, in 2019 were really profitable for the first time. So, real success model, and not just profitable, by the way, but also employee satisfaction went up massively compared to some rumors that are always being spread. So, a real success case. And in addition to the topics of IT and administration, we will also have to look at our distribution side, our sales side, and we will need to make progress there. In Germany, that's already become visible in P&C and life health, for example. And with this, I would like to hand over to Mr. Terzariol. Yeah, when it comes to P&C, there's AGCS, of course, where we need improvement, but where do we want to improve? Well, in general, we want to improve across the board. We want to see slight improvements everywhere, and we want to see the improvements in the figures. And in the first quarter, probably you won't be able to see this improvement in Spain, which is one of the areas where we want to see this improvement. But there were some major claims in the first quarter. But nevertheless, over the course of the year 2020, we're confident that we will see an improvement in Spain. In the UK, it's not about improvement, but as we've bought LV there, and also the legal and general portfolio, and in P&C, and I mean, if you have a merge and an integration there, then you always need to be a bit cautious, and this is where we want to see how the situation will develop. And then in France, with 98 combined ratio, this is not a figure that we're highly satisfied with, so we will also need to improve theirs. But all in all, the portfolio is doing great. But also in Germany, we want to improve a bit, of course, and where we already have a good combined ratio, but nevertheless we still want to improve and think we can improve by some basis points there. Let me add one thing, Giulio. What you cannot see that much in reporting, but what's important, Mr. Fleming, is the topic of corporate or industrial insurance in sum. And Mr. Terzariol mentioned Spain, so we see an increased claims inflation across the board in industrial insurance, not just with HECS in Germany, but in the UK, in France, and Spain. And for 6 years, we had a reduction of premiums, and now prices need to be controlled differently. We need a reworking of the terms and conditions so that this business in sum can become more profitable. So that's not just for HECS, but across the board in corporate insurance, we've seen a strong increase in claims inflation, and that's been reflected in strong price hikes in the last year in the US, but we need to see this in other countries as well, and there's more work to do in this regard than just with HECS. And then when it comes to reserves in Spain, we received another 75 million in provisions, and you will also see that we've included a comment saying if you adjust this for HECS, the result for the group would have been, the runoff ratio for the group would have been 3.2%, and Spain would be included in that, of course, and with 75 million negative. Okay, before I continue with Mr. Höfer, Mr. Fromme, and Ms. Meyer, one remark for those in the telephone conference. If you want to ask questions, please press star 1. Star 1 to announce your questions, and you can already do so that you will be placed in the queue. I have one or two questions regarding China. So what is your plan in this regard? There's a company which has Scipion, which has your size approximately, and so the question is, if you're confronted with such a major competitor, what do you do there in the insurance business? And the other question then, in China, there's a rich upper class, even though the income level overall is lower still. And here's a couldn't you make more profit there in asset management maybe than in the insurance business? Because there's a huge capital base and many rich Chinese also wanted to secure their wealth from the Chinese Communist Party somehow. Okay, this is a point I don't want to comment on that much, but regarding Ping An, it's a company that I'm quite familiar with. Half of that is a bank. Not too many people know this. They're really strong in life insurance and also motor insurance. Great strength, great performance there. So we need to consider how we want to compete with them. That's true. And on the P&C side, we therefore decided not to do traditional motor business through agencies, but with our partner JD.com to set up a digital business model. And based on the 300 million weekly users they have to use them as a customer base. But for that, there's still some regulatory steps that we need to take. In spite of the holding license we have, we cannot be present in all the provinces at the same time. So just as in the US, we have to get the approval province by province, and systematically we will spread the business or extend our business there in areas where we think we can make a difference in China. For example, in credit insurance, where we are the global market leader. There are also ideas about building up health insurance, and we'll do this specifically, segment by segment. But you're right, it will certainly take quite a while. And whether we can ever reach a company such as Ping An in China remains to be seen. But don't forget that the Chinese market over the past 8 years has tripled in revenues from 200 to 600. And in such a huge market, there's a huge potential for growth, even if you're only present in some niche. I mean, if you do Shanghai alone, Shanghai alone has the size of the Dutch insurance market, so of the Netherlands. So some cities have the size of whole countries. And the second point, then, well, it's true. Over the midterm, we think that in asset management, capital investment, we will have great growth opportunities. But right now, there are still some restrictions from the regulatory side, and we think that in the institutional area, if you only look at insurance capital investments, if you have a true divestment, a clean model, the Chinese insurance industry would have to invest 25 to 30% of its investment outside China, which they can't do right now due to capital controls. But we assume that there will be a loosening of controls over the next years, and then we want to be there in capital investment, in a leading position, because we're the only global insurance company that's been able to develop its asset management so successfully over the past years. And just one small correction, as this has been managed. So in addition to Fidelity, we're the largest active investment manager in the world. We have decided not to do capital investment management and passive investment management, and we're glad that customers don't see Allianz any longer just as a motor insurer, but also as a highly successful asset manager. Mr. Fromme, you're up next. Okay, what's gone wrong at HECS that you're now in so much trouble there and need to act? And in this context, Mr. Terzariol, you said that in P&C you want to come from 5 billion to 5.6 billion in P&C, and if you take out the 600 million reserve strengthening in HECS, that is serial growth. So you don't want to increase revenues there, or do you have to add additional reserves in HECS? Then I would like to know if Mr. Herndon goes into the SE, which is a change of the system so far. No OE head has been a member of the board of management. So is the switch of Mr. Röhler a sign that Allianz Germany will be dissolved, and will the other country heads in Italy and France also become part of the board of management of the holding, and will the country holdings be dissolved? And then finally, I would like to know, in Germany, you offer IT services for other insurance companies, maybe also beyond Germany, and also asset management service. So how many insurance companies have seized this opportunity, and how large is your market share if you take this into account? Okay, let me start with HECS. Let me first start with the outlook, and then I can talk about HECS in general. The outlook 600 million is 600 million better than in 2019. Yes, if we take out the reserves increase in HECS, that is 600 million. But you also have to see that interest rates will come down. So in the capital investment result, we'll have lower interest rate income than in 2019, and we need to counter this through an improvement in combined ratio. And if you add this up, you cannot just take the strengthening of HECS reserves, but you also need to look at the development of other KPIs. That is to say, the result is more or less flat, and without this, yeah, 5.6. This is the estimate, and the combined ratio that we've used for these calculations is around 94%, and so plus minus some basis points as always, but we calculate with the combined ratio of 94. So what went wrong at HECS? Well, as Mr. Bäte has already mentioned, it's not so much just an HECS issue. First, because the market in general for industrial insurers has been very difficult for many years. And over the course of the year 2019, then in addition, there was the development of the so-called social inflation in the US, and that affected us just as many as of our competitors. And in Germany, in addition to this, there was an increase in the claims frequency or average, stemming above all from motor insurance and the automotive suppliers, automotive industry and automotive suppliers. And then in Australia, due to the Royal Commission, we also had an increase in claims and financial lines. So these are developments we've seen across several countries, and we were affected by all of these. Of course, you always want to improve, but nevertheless, I would like to underline that the results of HECS are quite similar to those of other competitors. Some a little better maybe, but some were hit much harder even. So it's an industrial issue, and that's the positive element, if you wish. So we share the misery of others in this case, and we're not glad about others suffering as well. But it means that price increases will be very, very strong. We've seen massive price increases across the board, and that should support the recovery of HECS's profitability. Mr. Bäte. Okay, yeah, Allianz Germany. First of all, Dr. Theis, thanks to him, he wanted to go into retirement, and asked him to stay a bit to support Mr. Müller in leading the changes in Versicherungs AG to success, and then to stay even 1 year longer to onboard Mr. Röhler, and he did a great job in this. So thanks, Axel Theis, for the great job there. And as soon as we were certain that the work had been done, and Mr. Theis will now, after 33 or 34 years at Allianz, be able to enter into his well-earned retirement, we then appointed Klaus-Peter Röhler to the board of management of the holding, and did all the other appointments over time, because at the Allianz we always have an ordered process, and all the other changes will be discussed in the near future. And once we've clarified all of this, we will publish that. But any kind of dramatic change that you were hinting at, that all the country heads would go into the holding, and all the holdings the country holdings would be dissolved, there are no plans of that nature. At least I wouldn't know of any, and I should know, right? Unfortunately, we cannot hear the question because the speaker is not using a microphone. Sorry about that. So the answer is we don't have any. But so far, no country head has been on the board of management of the SE. No, that's not true, because Mr. Ruprecht was also on the board for some time. Yeah, but then it became a principle that this wouldn't be done any longer. That was explained at the time. And now you do this, and we ask whether has a meaning, and you say no, it doesn't have any. And at the same time, you tell us you want to reduce hierarchies. If you reduce hierarchies and take a country head into the holding, then I assume that you want to take at this level. Okay, well, yeah, you can interpret everything, of course, but we're also a company where you have to go through bodies and hierarchies over time. And I can answer this. We haven't changed principles in any way, but every principle is a principle and not a law. So we have to be flexible in the implementation of measures over time, you know? Ms. Meyer. Good morning. Some questions regarding P&C. Well, maybe it's due to the fact that I simply don't understand the figures, but you have an operating profit of around 5 million that you presented. But if I add up the individual figures, what the individual countries have earned, then I only come up with 4 billion. So where is the 1 billion that's missing in the operating profit? And then I would like to know a bit about the additional provisions you've formed, the corrective reserves and other companies that happens time of the time, but I couldn't remember you haven't reported that ever. And so the question is, when did you last have to report on such a corrective reserve? And if I'm right, and this has been quite a while, what is the reason that you had to correct the reserves there? So I learned that there was some buffer, and if claims added up, you would take this out of this buffer to keep results stable over time. So has this buffer been too small, or what's the reason for these corrective reserves you had to take? Okay, if you add the figures on page 15, these are only selected units. For example, Allianz Re is lacking from this. Asia hasn't been included. If you want to add up all the figures on the internet, you can find a package where you will find the detailed figures. But those here were only selected units, so that doesn't add up to the 5 billion. When it comes to the corrective reserves, well, with some years ago, I think you were the CFO at that time with Fireman's Fund or so in 2011 or 12. We had to do this, and you know, you can have buffers as you called it in other units. But you cannot take the buffers from other units, you know, if you have to do additional reserves in one unit. So that's a little bit separated, and we didn't want to we only had this reserve for HECS, so we didn't want to take the buffers of any other units. But nevertheless, it's a great question, Ms. Maya, because we just looked at the figures. We looked at figures of the past 15 years, and we always had expected a higher claims inflation than we then had, and that led to the fact that we had a high runoff ratio then, and that turned around. So the long-term trend in claims inflation went up dramatically, we have to say, Ms. Maya, and we have to realize that the additional claims inflation now needs to be included and priced into the annual plans. You know, you mentioned Spain as an accident where we underestimated claims inflation beforehand. Now we've solved this, as we do as Allianz. If there's an issue, we deal with it. But in the reserves for claims, we need to take this into account because claims inflation has gone up strongly. And then the second part, you always ask for this buffer. You've asked for this buffer. Well, we try to make sure that the balance sheet remains stable, and the auditor, by the way, also does this for the supervisory board, looking at the fact whether the result development is positive or stable or not, and then they, in their auditor's opinion, they tell the supervisory board whether the recognition was done aggressively or conservatively, and the auditor said that we have a very conservative recognition there, and net reserves even went up. So when it comes to free reserves compared to 2018, we have more reserves than before. And coming back to Mr. Terzariol's statement, what is really important, it's really important that Allianz stands for stability and strength, and without HECS we would have another 3% runoff, as we had in the past years, as we've already had under Mr. Perlit. So we still feel quite comfortable when it comes to the general strength of our reserves, but nevertheless, it's a good point. It should be, especially in portfolios as in Spain, where we have retail business. It can be that we wake up and then 70 million are lacking there, whereas HECS is different. So could be that there is a major loss in a in liability insurance, and that goes then through the courts in the United States, for example, and at the end you come up with a completely different sum than in the beginning. Oftentimes it's the case that the lead insurer sets the first reserves, and we're then in a body of others, and then sometimes we have to add this. Okay, next up we have Mr. Reich, Mr. Hübner, and Mr. Magenham, and then I would like to go into the telephone conference. Mr. Repka?
Guten Morgen.
Good morning. From the Plato brief. I have 4 questions. Just briefly, Mr. Bäte, on the topic of what we said before. Whether levels could be reduced or would be reduced. Can you say whether that is planned in Germany? And because you said you have to bring along and flexibility and you mentioned principles, and then I would like to know what you meant when you said the IT and administration was made more efficient, and now you plan to make distribution more efficient. What do you plan there? And for the 2 questions on figures, and I would like to know whether I got it right. The new business margin in life and health went down versus previous year, and which is largely due to the capital efficient products, if I see this right. Do you see more competition, or what is the real reason for that? And Mr. Terzariol, maybe you can briefly say, looking at your portfolio in asset management, and if you change it to CO2 carbon neutral investments, will this have effects on the returns? Would you have to consider that, or can you see that, whether that has any yield impact? Yes, I start from the back, and as I start at the end, and Giulio can also add more. Now we believe that good sustainable investments rather improve the yield, and so we meanwhile are convinced that good activities pays off, and specifically when it comes to the topic of climate. Second topic, capital efficiency. That is a smart observation. So we have dramatically less capital needs and what we call CSRG, but they're also interest sensitive. And if the interest rate, like last August, drops below 0, then these products still have to be consistently developed, and with repricing, what we do in Germany as well, it's rather difficult, and it's not going to become a simple task, because the question of the contribution guarantees and the expenses in the industry is looked at, and we continue to do that. And I can only say I'm largely impressed about the consistency that colleagues have done that in the 4th quarter. But please consider how we calculate that. We say beginning of quarter number and end of quarter number, and Giulio is going to explain that now. And we're doing fine to go beyond our 3% new business margin by further adjusting our products. It sounds so easy, but it's definitely not easy to be done. It has nothing to do with competition, mainly driven by the interest level and the long-term interests, which are meanwhile lower than in some extreme scenarios. When we started in 2011, we took Japan. It was almost 0, and we could never think of going negative, but we took this as a basis scenario. Normally it takes long to change that. There's a key figure, you all know, the duration gap. So the difference between the capital investment and the liabilities, and that was 4 years. So you would say today it's 4 seconds. So you want to make sure that we want to adjust this duration. When interest drops, we have to work on that. You can also see this in the solvency ratio. It first of all dropped by these interest rates, and now we worked on it, and now it goes back up again. It's a dynamic system that we also look at, and we also do the real time. The topic of distribution, good observation, that's a great chance. That also comes from the topic of social media and the larger transparency in products. This can be felt as a threat, but you can also see this as a chance. What do I want to say by that? we have become the strongest brand as insurer worldwide. No matter whether you take whatever key figure or interbrand. So more and more customers now start to look at Allianz and search for Allianz in the internet. You may ask, what has this to do with distribution costs? In many countries, we started to systematically that customers searching for consultation to send them to our top representatives and agents. Now, once we're able to do that, we're able to reduce the expense ratio then, because the search costs for the agents are being dramatically reduced, because now we bring our customers directly into our agency. So that means the commission per sold policy is reduced. Now let's imagine that we're going to do this more successfully, step by step, in the next few years, that more and more customers who are interested in Allianz will be sent to our agents, and that have to spend less time with finding customers. Then they can also spend more time with customer at the consultation and signing the deal. So we want to strengthen our market strength, brand strength with that. Now we've got the last topic. So we always have to keep internal discussions of how we're flattening things. I don't really want to inform information about changes through the press, but we rather discuss that internally in the committees, and then we inform the public. Once we should plan changes, we will do this in the committees, and once we do that, and then we will inform you in due time and professionally. And that really ends the questions about this topic. Mr. Hübner. Yeah, I have two more questions. One on the topic of Spain. Not about the past, but looking forward into the future. You showed us where you have made acquisitions, which obviously is still a problem a little bit, because you're looking for a bank assurance partner in Spain. There was a public tender, there was an RFQ, and it was a bidding competition. And where you're standing there, is that still running, or do you have to reorient yourself? Second question, Olympic Games. You're one of the sponsors of the Olympic Games, so that's why it would be quite normal that you'd also become the insurer about the Olympic Games in Tokyo. Talking about coronavirus, would that have to be cancelled? So my question is, in this, do you have an cancellation insurance because of that epidemics? Yes, our exposure is increased, but after 2020 officially, we're still observing that. So that's why we do not have any exposure on all these topics. And with the Olympic movement, we want to be committed, but we not only do this on a global level, but also we are one of the leading partners of the German Sporthilfe, and we do this in the general sports and also in top sports in Germany. So sports will be seen as, that keeps the society together, because we keep talking about polarization, young and old, and left and right, and old and young, men and women. Now we want to invest and commit into things that keep the society together. And that is the idea behind of Olympic support and sports. But Mr. Hübner, you know this. I cannot say about current negotiations. I may not even say something about negotiations that are currently running, even if I would like to. Mr. Wagenheim, and then we would go to the telephone lines. I'd like to probe one probe on the staff, because I haven't seen anything, and how the headcount has changed globally and also in Germany. And also another question about possible staff changes in the future. There seem to be changes, if I got you right. Is this affecting rather the captains or the Indians? That's a super point. No, it's never about the Indians. No, we're proud of one thing, and so thank you very much for that question. One of the topics that we also discussed with the employee representatives, one thing that we're really proud of, so far as compared to all the other companies that make this restructuring, we had no radical redundancies that we had to announce and to use that in order to drive our share prices. That was one of the biggest learnings of the first few months before I became CEO, that this can be seen as a continuous process. What do I mean by that? Naturally, productivity increases come from digitization. Anything else would be aligned. It's not a question whether people would be redundant, but over time and how does this be done, and are the social partners being involved, and can we grow in our industry to create new jobs? Let me give you the example of Allianz Lebensversicherung. Over the years, this has become more efficient, and I think, meanwhile, it has the lowest expense ratio in the German life insurance industry. But Mr. Frommen knows better if that's wrong. In case, nevertheless, despite in our last few years, and despite with our big success in new business, we could in a larger headcount, digital and also services. My dream is to translate this growth of market shares and customers, and then also jobs will also be secured. That's not the target to reduce jobs, for the sake of efficiency gains. Doesn't make sense because you don't get people motivated. So it will not be about, as you ask, to reduce the Indians. No, definitely we want to make the leadership structures more efficient, and I can say so, but it has nothing to do with changes in Germany. If you look at country head and also the employees in the call center, as in large OEs. So 20 years ago, we had 12 management levels in between. 12 management levels. We still have sometimes 7 or 8. I can back that. Will be only 5 or 6 in 10 years. So this can be seen. And with this restructuring, we want to deal with that diligently and with all people involved. But saying there's no change, that of course that would be nonsense. And the figures are stable versus the previous year. That means we became more productive and we have many more customers than employees. My second question on the coronavirus is that in some way or another, is that becoming an insurance case or like interruption of business, or is that not relevant at all? In terms of figures, it's not a big problem so far. There are no operational interruptions. That means that you would have actually an interruption of the operation, which would be the root cause. But Giulio Terzariol has the clear figures for you. So when you have operational interruptions, first of all, you would have to look at the root cause. And if the root cause is not a real P&C, a casualty or claim, then the interruption does not come in. There are special policies which are able to cover that, but these are not the policies that we're signing. So that's why business interruption would not be a burden for us. But we do have an exposure because we do have that in the travel insurance. Otherwise, you would say, why haven't you told you? No, sure, yeah, in travel insurance, but not for Allianz partners. That is, it's only for certain contracts that we were selling in Asia. But it's a minimal exposure for the group. But we're also going to see the production in China in life insurance is going to become less. That's normal. And obviously, this will lead to a slightly reduction value of new business, but that is definitely relevant for the group. So in some OEs, there is a certain effect, but I think it's rather limited for the entire group. Now, I'd really would like to go to the telephone lines. Actually, we have hardly any more time, but I would like to go to the telephone lines. If you would like to ask a question, press star 1. And the first question comes from Oliver Ralph. Oliver, please go.
Hello, just a very quick question on AGCS. You mentioned there was some reserve strengthening for financial lines. What was the issue in financial lines that caused you to strengthen reserves?
The issue in financial lines is mostly coming from Australia and also partially from the UK. And if we just look at Australia, you know that there is the Royal Commission over there, and this has an impact on director and officer liability. So that's a trend that you can see in the market. So mostly the issue financial line is coming from the Royal Commission impact on the environment in Australia.
Oliver, did you have another question? Is the answer sufficient?
That's enough. My other question was answered already.
Thank you. And then we have Ben Dyson from S&P Global Market Intelligence. Ben, you're on the line.
Okay, thanks very much. Yeah, I just wanted to ask whether the increases you're seeing for AGCS is going to be enough to combat the claims inflation that you're seeing.
I would say I would differentiate between US and Europe. In the US, we see massive rate increases. We also believe that claims inflation in the US might be still stronger compared to what we see in Europe, but fundamentally in the US, the rate increases are massive. We also see rate increases in Europe, maybe not as strong as what we see in the US, but also the expectation for inflation is a little bit lower. But what we are doing in Europe, it's a lot also changing terms and conditions. That's very important. Now it's not just about rate increases, that's also really changing the portfolio. So the deductibles are going up, the limits are going down, and that's where we are working very closely in Europe. And also we go account per account, and so we take a decision whether we want to renew the accounts or not. So there is a lot of pruning going on in Europe. So overall, if you ask me, we see a strong reaction and a huge hardening of the market more or less across the board.
Did you have any further questions, Ben?
Yeah, just is the rate increases that you're seeing, particularly for AGCS, are they keeping pace with the claims inflation?
Yeah, no, we are targeting rate increases ahead of inflation, so stronger than inflation. And clearly, you can always debate what inflation might be, but as we set our assumption about what we think the inflation is going to be, the intention clearly is to get price increases north of it so that we can bring the loss ratio down. So the answer to your question is we expect a positive effect from the rate increases versus the development of the inflation.
Okay, thank you very much.
Thank you. All right, back to the plenary. Zurück hier ins Plenum, Herr Fromme.
Herr Fromme und Mr. Hertz, and then we will end. You mentioned the NPS, and you have not mentioned the NPS figures. But you said in which market in NPS you're market leader and the percentage of the market leader. So why is Allianz shying away in mentioning the NPS leader? Would be nice if you would mention them. I asked the question before how many customers you have in IT and asset management and insurers that are using your system in Germany, and that was not answered. There are reports, and we keep hearing this quite often, that there is a dispute between the SE and works councils and the SE, and some argumentation specifically in the works council as Allianz Re. And how does that fit with the socially compatible change? And because people go to court quite often, why is that happening? And then one more principal question about industrial business, because Mr. Terzariol said so friendly that the terms and conditions would be changed and reduce the exposures and increase the rates. I mean, with such a virus, would you not have to say, yes, now we have to have claims there? If we would not have any claims, so why does the industry need us? So because the problem is in cyber, but also with things like that virus, you became completely unimportant of what is been doing in the industry. So no wonder that the industry says we can also live without you. So my idea is that the insurer really suffers in hard times, but the shareholders and people say they should never suffer, because no matter what happens in the world, maybe we have a different opinion. We need to make a fair profit, and of course, we do know there is a loss ratio and there's a combined ratio, but that should not be at 112, naturally, because then the system would not work in that case. But clearly, with a loss ratio, so when we have 93%, that overlaps, yeah. We also have 95, so that means 112 is definitely not the right answer. I find Mr. Fromme is right. Let me try to answer it differently. If we only look at 112, then probably that would be okay. But unfortunately, and that's why we're so annoyed about that, IGCS is not only having this high combined ratio in 1 year, but for 3 years also. And but you might also ask critically, you have watched it too long, and so if you act immediately, then you would be seen as too harsh. And we had a lot of people in the top leadership range that were successful for 20 years in Allianz, and we were always trusting them and saying, okay, when we talk about the repricing and the growth that you have in the US, is that really profitable? Do you really manage the losses in Australia? And once you go deeper and deeper, and then you find, aha, this is not under control, despite the good controls we have. Then you come to a point where you have to act. And I personally would say that was negative for me. Actually, we should have started 1 year before. And Mr. Former, we need to cope with volatility that we had in 15 and 16 from NatCat. I mean, that's what we're here for. Cyber, Mr. Former, we cannot cover that completely. It's really critical because the question is, what can you insure in cyber risk? What is the diversifiable risk anyway? That would definitely be done based on the insurance concept. That can be done for small enterprises and for retail customers, but for globally connected customers which are exposed to systemic risk, you have to intensively do that. We can't do this today, but actually, you're right. And you also talked about the SE. Allianz 3, we mentioned that before, that is a separately managed unit. And in fact, that there were a few disputes on the SE and the 1,400 employees at the IAIS. The employees' satisfaction survey significantly increased, but also for the first time on group level. Because in the holding, there was always the question, what is our motivation? And this has become much better last year, and I'm particularly happy about that. But of course, Allianz Re, we need to do something that, and you listened carefully. All right, yeah. I don't have these figures, Mrs. Schwarz. I don't have these figures in mind, but we have a relatively large list of people who are interested. But I cannot say who is list. The Frankfurter Leben, we announced that. We are now negotiating diverse various partners. The pipeline is full, but I cannot give you the current figures. I'm sorry. NPS per OE. We don't do that, but we can still tell you. In Germany, it's above market in life insurance and in P&C. I don't have the exact figure. So yeah, let me explain. It's not that we're trying to, because we're not talking about transparency, but I still like your questions. And there's a method in NPS, one challenge that comes from Bain. And we thought of how we can measure that as the best method, but it's not perfect. And if you take one figure, for example, if we have an NPS of 40 plus 40 with LV in UK, and we have an NPS of plus 15 in Germany, does that mean that customer satisfaction is 3 times as high as in Germany, which is actually not the case? It's because of the calculation methods of this figure. And the second thing is it's also about the level of the industry. There are NPS figures in countries which are negative for the industry, like in life insurance in Germany. There are more detractors than promoters, and we cannot really explain that analytically. And we are much further ahead in positive terrain as of those who are negative in the industry. And there are others in the industry which are negative. We are above the industry, but not too far away. It's a method problem. And that's why we decided instead of writing thesis or in explaining the differences between the OEs, so taking the comparison with local competition, like in Germany, unfortunately, we are better, unfortunately better than most of the companies, but Hook Coburg is much better. And of course, we want to reach that level as well, but it involves some more work. Mr. Herz, you're the last one, if you have another question.
Ja, Herz.
Yeah, Mr. Herz of Handelsblatt. I still have one question. If you permit me one last question. So you had the proposal not to report quarterly reports every 3 months, and my question would be: you're in talks with the German Stock Exchange. How much time have you given yourself for that, and have you received responses from other companies on the Prime Standard? Well, I won't talk about our talks with other companies, but with the German Stock Exchange, we've been in constructive talks. And we'll take the time that we and they need to come to a decision. I would say that the talks so far have been highly constructive, and I believe that we will come to a good solution that will be to everyone's satisfaction. Mr. Fromme, we have 6 IT customers plus pipeline, if you had asked, because he had asked about this. Okay, that brings us to the end of our annual results media conference. Thank you for coming. Thank you for listening on the telephones, and have a nice day. Thank you very much.